My first two Iraqi dinar videos had over 400 comments. So I've heard just about every lie people have been told to make them believe it's a good investment. Now it's time for me to debunk every single one of them. Today, we'll be covering everything from lies about the historical valuation, to lies about the Kuwaiti dinar, to how they make it look like it's not a scam, and all the other lies they tell you about why it's gonna go up. Also, unlike the other channels that talk about the dinar, I used to advise investment professionals at UBS, Merrill Lynch, and Morgan Stanley. Okay, let's get into it. The most common question I get, and this is actually a good one, is how can a currency be a scam? It's a scam because it's sold with huge fees on the false hope that it's gonna magically revalue up 1000x overnight, which is impossible. And then people say, well, how can these companies be scammers if they're registered with the US Treasury? Because they register as money services businesses to get around the regulations that make it illegal to sell an investment without being properly registered, which they're not. They put out fake articles with tons of false information that tout the potential of the currency and downplay the risk. All they care about is collecting their 20-ish% fees. It's a scam. They reel you in by convincing you that huge returns are right around the corner. On June 9th, someone told me it would happen on June 18th. It didn't. Then there was a big meeting coming on June 25th. Then they said July 2nd. It's been going on like this for 20 years. There's always a next event that's gonna be the trigger. The budget will be passed on a much higher valuation. You just wait, Kyle. Then they say, okay, the budget was passed based on the same valuation, but it hasn't been signed yet. It's gonna be amended. Of course, the deadline came and went, it wasn't amended, and nothing happened. What people need to understand is that it is impossible for a currency to revalue up 1000x overnight like they're hoping. A country cannot just choose to change the exchange rate. It doesn't work that way. Currencies move based on supply and demand. So in order to move the currency, they'd have to dip into their reserves to buy a significant amount of dinar overnight. They definitely don't have enough reserves to push their currency up to $3. And it's very unlikely they'd ever even try to use them that way. They need their reserves to maintain their peg to the dollar. And over the next few years, they're gonna need even more of them to make up for their massive budget shortfall. At the current oil price, their reserves will be gone in a few years. So I doubt Iraq would want to burn through them any faster than they have to. That $3 figure comes from the biggest lie they tell, that prior to the war, the Iraqi dinar was worth more than $3 US. That is false. The dinar was demonetized, aka made worthless, and the current version was created in 2004. It did not exist before that. Here's what happened. Before the Gulf War in 1990, the Iraqi dinar was worth over $3 because it was pegged there by Saddam Hussein's autocratic regime. But after Iraq invaded Kuwait, UN sanctions stopped them from being able to physically get the paper they needed to print more of the same money. But guess what? They had to fund a war, so they needed to print more money. After that, they had two currencies. They created a new currency called the Saddam dinar, which was way overprinted. The old bills became known as Swiss dinars and only circulated in the Kurdish regions, which were not really controlled by Saddam Hussein and refused to accept the new currency. The Swiss dinars mostly held their value for a while. Once Saddam was gone in 2003, they created the new currency that they use today. So you might be asking yourself, what happened to the holders of the old ones? Listen closely because this part is important. If you had the Saddam dinars, which had already been massively devalued, you could exchange them one for the new dinars. If you had the Swiss dinars, which had mostly held their $3 value because they couldn't be printed anymore during the war, you only got 150 new dinars for each Swiss dinar. At a valuation of a little less than 1,500 dinars to the dollar, the currency was devalued from about $3 to around 10 cents. It lost about 95 to 97% of its value overnight. The Iraqi dinar that is currently circulating today did not exist in 1990 and was never valued at $3. There is no reason to expect it to ever go back there. So once they've convinced you that the Iraqi dinar used to be worth over $3, they give you hope that it could go back there with their second biggest lie. They say that's exactly what happened with the Kuwaiti dinar, which was revalued up to over $3, making many people very rich. Unfortunately, that is also false. First, the pre-war Kuwaiti dinar is not the same currency as the current Kuwaiti dinar. Sound familiar? It did not revalue. The old currency was demonetized, aka made worthless. Then they switched from the Iraqi dinar for a while, and then a new currency was created after the war. Don't believe me? Here's a quote from the Central Bank of Kuwait. The currency was withdrawn from circulation effective March 24th, 1991, and ceased to be legal tender after 45 days from that date. As of September 30th, you could no longer exchange the currency. That is how it would likely work if they dropped the zeros in Iraq. It will be done through demonetization, which would actually be the worst nightmare for any dinar holder that lived outside of Iraq. I already did a video on that, so I'll just put a link up to that one at the end to explain why that is. It really doesn't matter if the Iraqi people want the valuation to go up, or they were promised a higher rate, or the economy doesn't work at this rate, or they can't do what they want at this rate, or if there will be a major uprising if there's no revaluation. Correct. They can't afford to do what they're planning, which is why the IMF said their most recent budget could reignite inflation and FX market volatility. Translation: the dinar is likely to weaken over the next few years because their budget is not sustainable. Uprisings happen pretty much every July because they can't get the lights on or the water running during the blistering hot summer months. Since an overnight revaluation to $3 is literally impossible, an uprising is much more likely. There's a lot of rumors surrounding JPMorgan as well. In my comments section, people say things like, they're investing a lot in the country because they see huge potential. They wouldn't be there if the currency wasn't going to revalue. But hey, guess what? These are also false. JPMorgan is the largest bank in the world and has a tiny operation in Iraq. They're there to help the government set up a more modern financial system. On the surface, that sounds like real progress. And maybe it could be. But you have to consider that the US has been trying to help Iraq set up their financial system for 20 years. So at what point do you finally admit that it's probably not gonna happen? Okay, so then people say, well, Kyle, why would Pepsi be there if not to make money? And here's the answer. Companies can make money in Iraq. That doesn't mean the currency is going to go up. Pepsi is produced and distributed in Iraq by Baghdad Soft Drinks. All Pepsi did was license their product out. They made no investment in Iraq, and they are guaranteed to make money. This goes for every company in Iraq. Iraq has an economy, and companies can make money there. But running a business that sells a product or service for a profit is very different from buying and holding the currency and hoping it appreciates. No company's doing that. Lots of people also talk about investments companies are making or infrastructure building or how they're going to start building a financial hub or trading hub or capturing natural gas. These arguments are all either completely false or their potential impact is blown way out of proportion. But that's not even the main issue. Even where there are shreds of truth, the fundamental flaw of these arguments is that buying a currency is not like buying the stock of a country. It doesn't make profit. It doesn't pay dividends, and it doesn't create value of any kind. A currency also doesn't represent a nation's wealth and economy like a bond. Bonds pay interest. The currency does not. The absolute value of an exchange rate also doesn't matter. People will say, oh, this currency or that currency is more valuable than the dollar. That is just irrelevant. Think about it like the Dow versus the S&P 500. The Dow has a much higher price, but not because it has been a better investment over time, or it's stronger in any way. It's just constructed differently. From an investment perspective, all that matters is how much it goes up or down while you own it, not the price that it starts at. So people have also asked me why the US reinstated Executive Order 13303, which helps Iraq. The simple answer is to protect US interests in the Middle East. Iraq is an important regional ally helping counter Iran, and the US is also trying to get them to crack down on money laundering by terrorist groups. That's also why they recently banned the use of dollars, which has led some people to think the dinar is going to revalue. The money laundering crackdown has led to a dollar shortage. The Iraqi government needs dollars to maintain the currency peg at 1,300, so they banned its use to get everyone to exchange their dollars for dinars. The government's trying to get their hands on as many dollars as they can. As of late May, the dinar was already trading down at a valuation of between 1450 or 1480 to the dollar on the black market, more than 10% weaker than the official exchange rate. This is classic emerging market behavior when currency pressure is beginning, and it's a pretty reliable predictor of an eventual currency devaluation. It's definitely not a reason to believe the dinar will appreciate. People will also say the Iraqi dinar is backed by oil or gold or assets, unlike the worthless US dollar. That's just false. No country is on the gold standard, and Iraq's gold reserves are only worth a tiny fraction of their currency outstanding. Oil does drive their economy, but the dinar is not backed by oil. You don't have any claim on the country's oil reserves by holding their currency. The Iraqi dinar is a fiat currency, just like every other sovereign currency in the world, and there is no direct link to oil or gold or any other commodity. Oil also does not make a country wealthy or a currency strong. I did a whole video on this, so I won't rehash that here, but when people point to wealthy petrostates like Saudi Arabia and the UAE, all you have to do is point to extremely poor petrostates like Venezuela and Iran to see that obviously having oil alone does not make a country wealthy. You need sound fiscal and monetary policy for a start. And Iraq doesn't have that. Some people give the examples of Germany and Japan, but they also had things that Iraq doesn't have. In Germany in 1948, the Deutschmark replaced the Reichsmark at 1/10 the value. It was demonetized. Sound familiar? Over time, it appreciated from there because Germany was an advanced economy already. They were coming out of a planned and distorted system into one that allowed free markets to thrive, and the world opened back up to German exports in 1949. The yen appreciated over a long period of time because their economy was booming. Actually, it turned out to be a bubble. Both Germany and Japan are completely different situations from Iraq. They had diverse, globally connected economies with big new opportunities opening up to them. Iraq, on the other hand, is a corrupt petrostate that's been in recovery for 20 years, but still has not become a true democracy, diversified its economy, made any significant economic reforms, or come across any big new opportunities. 99% of their exports are oil, and that funds 85% of the government's budget. So could the dinar go up if Iraq made significant reforms and diversified their economy? Sure, but they're not doing that. They're actually doing the opposite. The massive, unsustainable fiscal spending in the new budget they just released will destroy the economy and currency long before any hoped-for growth or diversification can materialize. People also say the dinar's valuation is being purposely kept low by the Central Bank of Iraq and U.S. Federal Reserve. Again, these are just made up. The Fed has nothing to do with the dinar's valuation or the Iraqi economy. The CBI is actually propping the dinar up right now, which is why its official exchange rate is higher than its black market exchange rate. If they let market forces take over, the valuation would already be lower. Given the dollar shortage and unsustainable budget, it's only a matter of time before they can no longer maintain the peg. Now we get into some of the real crazy theories. So everyone put on your crazy glasses. Apparently, someone named Clement prophesized that the dinar would revalue. I can't believe I'm even lending a sentence to this one, but this guy's been proven to be a false prophet time and time again. He literally said there will be two presidents at the same time. Come on, how could you believe stuff like that? A general rule of thumb in life is don't listen to for-profit prophets. Another good one is that quantum computing or something else is going to create a global system where all currencies trade equally on a one-to-one basis. Unfortunately, back here in the real world, no country would go for that because then they wouldn't be able to manage their monetary policy and it would completely destroy the global financial system. People also just love to make crazy things up. There are so many good ones out there. Here's one. The US has $35 billion worth of dinar in reserves. False. Iraq is becoming the financial hub of the Middle East. Really? Have you ever been to Dubai? Iraq's economy is completely dependent on oil, and their currency isn't even on the main foreign exchanges. And somehow it's going to magically turn into New York. I don't think so. Warren Buffett bought a bunch of Iraqi dinar. This one cracked me up when I first saw it. Warren Buffett does not buy speculative currencies. You can see what he owns in Berkshire Hathaway's annual report. Another thing that's caught me by surprise is that a lot of people say someone must have paid me to make these videos. I appreciate you thinking they're that good, but no one paid me. If you watch my channel, you'll see I make videos on many topics with the main goal of teaching people how to invest. As part of that, I made it my mission to combat some of the false and malicious information out there on the internet, and that's where these videos come in. So I'll end with some valuable investment wisdom that's useful for everyone, not just dinar investors. I'm specifically including it here for the people who say things like, well, I've been in it since 2004, so I might as well stick with it. This is one of the most common investment mistakes people make. They refuse to sell losing positions or acknowledge information that challenges their preconceived notions. This is very hard to do because our brains are actually wired to ignore things that are contradictory to our opinions. They've done some really interesting psychological studies on this. It applies to investing in the sense that it makes us hold on to positions too long, regardless of whether we're right or wrong. Successful investors regularly ask themselves, why might I be wrong? They actually seek out diverse sources of information and listen to opinions that are different from theirs with an open mind. If you do this, you may disagree and decide to hold on to your position, but it's always important to stay informed and be willing to move on from positions if you no longer believe it's the best place to put your money. The past is the past. You can't change it and it has no bearing on the future. Every day is a decision of, if I didn't own this, would I buy it today? If the answer is no, it might be time to move on. In our example here, the S&P 500 is up almost 500% since the beginning of 2004. You may think you're not losing money, but you are. Your money is losing purchasing power over time, and there's an opportunity cost. You're missing out on other things you could be investing in, almost all of which have a better chance of long-term returns than the Iraqi dinar. Currencies don't pay interest. They don't generate profits. They don't pay dividends. They don't do anything. They just sit there. And this one is literally pegged to the dollar by Iraq's government in the budget they just passed for the next 3 years. It's already done nothing for almost 20 years. The dinar revaluation has been predicted hundreds of times, and they've all been wrong. There is no legitimate reason to believe it will ever appreciate against the dollar, and a massive overnight revaluation is literally impossible. So let me ask you, given what you know now, would you buy the Iraqi dinar today? Let me know what you think in the comments. Thanks for watching.